Hey everybody, hey traders, Chris Pulver here. Happy Friday. It is 5:16 p.m. on the 16th, and we have finished up another week of trading. Let's take a look and see where things were at for the week. Day was pretty quiet. We actually had several quiet days this week, despite the gaps. I mean, the actual intraday trading was somewhat muted, but the market still finished, quite high for the week. I'll show that in just a moment. But one day performance, things were nothing really stands out as far as deep in the red, deep in the green. Everything was kind of just there. Let's look at the advanced decline for today. We have 65.4% of stocks advancing, 30% declining. The 50 period moving average, we have 62% back above the 50 period. We have 65% of the market back above the 200 period. So again, what's nice is we're experiencing a technical bull market once again. From the week to week performance, let's go for the 1 week. Lots of green. So we knew that, since we had our August 5th bottom, the market's been ripping in a big way. I was pretty surprised to see the pullback levels. I was, fairly confident that we would bottom out here, for an aggressive recovery, pull back into some gaps. This kind of 50% zone right around 537 on the SPY, and we blew through that by Tuesday. I did send a video earlier this week where I was looking at a measured move. So this low to high, creating a bit of a neckline there, or kind of a cup and handle line. Then we had a pullback and we break through that right in here on Monday's trading. And then Tuesday's gap up had a nice directional push. So we did fulfill that symmetry. And I think we went just a little bit beyond that. So let me measure this one more time. So low to high, and copy and paste that line right here, right there. So we did get right to that symmetry point. We came right back to that August 1st sell-off point. And to me, that's a bit of the roadblock that the market has to get through. Now, I'm I'm fully aware that this rip for 2 weeks has been pretty darn bullish. I've had a huge swing at P&L in my favor, which has been nice and exciting. Had some good profits this week. I posted in my channels here. So winners for the week, if I go into my little blog, I had winners on Monday, Tuesday, Wednesday, Thursday, Friday for a daily strangle trade that I do on the SPX. And I also had a trade that was a winning trade that expired today on crude light futures. I also had one on the Russell. I had one on SMCI. I had one. I actually took a loser on IWM with a call option. When things were getting a little crazy, I took a nice win on IWM from a 182 to 215 when we had the big spike in July. So that was a nice winner on IWM. I got back in with an in-the-money call at 200. I went ahead and just took a small loss on that one. But then I had a ratio spread on Apple, ratio spread on PayPal for winners. So overall, pretty good week. Posted just what I want to review for today's video. So pretty active, pretty good P&L. Happy with that. The next stop to me is are we getting to all-time highs? And I think that's what maybe everybody's asking is we are so close to getting there now. Question is, can we get there? We do have some news next week. We have Wednesday FOMC meeting minutes. We have Thursday Jackson Hole. Friday will be Jackson Hole plus Powell speech. We also have PMI services and manufacturing numbers coming out of the U.S. on Thursday. So there's a little bit of news. It's not necessarily employment related, but it is economically related. So having a softer services or manufacturer PMI, if we're below 50, that might kind of weigh on the economy. We'll see. We'll see what type of comments come out of Jackson Hole on Thursday, Friday with Jerome Powell. But like I said, we're very close to getting these highs. I was a little shocked to see that on the S&P, we have pulled back around 78% of this move. Now, initially, I thought a couple things. One, we could pull back to 50%, find some equilibrium. Two, we pull back to 70%, start forming some highs and have a wedge. Or three, what we're seeing right now is we're going to try to go back and break these highs. Now, one thing that might be a little bit tricky for traders, and I'm kind of preparing for this, is we have a high right here. Oftentimes with the stock market, if there's momentum behind this move, this top is probably not going to be halting or stopping price action. So if this market is just so determined to get back to these highs, okay, are we going to then see more highs to the upside? And if so, a couple levels I'm watching. Let me go to a slightly bigger time frame here and take a look. If I connect this high right there, okay, and possibly connect this low, Are we going to start some type of wild and crazy volatile broadening pattern where we come up to the highs and we stall, we pull back to this level here, but if the bears were to overtake this, are we going to actually turn and go back down into some type of corrective fashion? I don't know, right? I'm clearly like trying to put my head around what do we do if we get to these highs and the market's not stopping? I don't want to turn into a bear. I mean, to get to 600 on the SPY would put the market up around 23 to 25% for the year. That's very achievable. We've seen the S&P have plenty of 20+% years. We've seen the Nasdaq have plenty of 20 to 25 to 30+% years. And this could be one of those years where blinders are on. It's as good as it gets. It's Goldilocks until something breaks. And that's the issue that we might have to deal with is maybe something does have to break. Maybe the news isn't bad enough for the market to crumble on itself. What we had from, August 2nd to August 5th, what was a taste of volatility, but not enough to derail the market and this buying the dip culture that's been so pervasive the last 15 years in the markets, and it's being rewarded extremely well. So if you are a buy the dipper, you're doing pretty darn well in the markets. Yes. Okay. So where are we? We are closer to the highs than we are to the lows. If I am going to be a seller, okay, if I'm going to be a seller, it does me no good to try to call the top right here. Okay. So if we see some hesitation, we do have a gap fill that could be coming in. We do have a gap fill here as well. So if the market hesitates just a little bit, maybe that's where we go, right? Little pullback into, let's say 545 or 540. But if it doesn't break this trend line, looking to see if the market's going to keep going higher and nudging towards that all-time high. If we turn right away at the all-time high, okay, well, let's see what price action gives us. I think just like we had here, we had a nice long rally. We stayed overbought for a while, but then we broke the trend line. So do we actually have a little bit of a cycle here, back up again, get to the high? Do we roll over and break the trend line? If we do that, I'm a little bit more inclined to take bearish positions. Otherwise, I'm going to start positioning for this trade I've done for a while, the last couple of years, just trading some indexes. And it's basically, it's kind of complex, but if you understand options, it looks something like this. This would be my zero line, and I have a trade that I have a dead zone, okay, something on the SPX, for example, and then I have a profit target, and then more credit, and profit target, more credit. So my loss would be in here. My win would be small, just if we have about a 50 to 50 point move. So 50 points up or 50 points down, I start to generate some profit. If we have 75 to 100 points one way or the other, I have a couple of profit peaks. So it's a nice constructed trade. It takes 8 legs to do this. So I'm watching all the call sides. I'm watching all the put sides. I may also add a hedge in the middle. I could add a debit with a broken, or not a broken wing, but a regular butterfly spread, and see if I can hedge that. But obviously, if I win this side, lose this side, I need to make sure that my winner walks away profitable with all 3 positions. Otherwise, I just take the risk here, look for a winner on one side or the other, and just try to stay somewhat neutral week to week and see if the market's going to give us some decent or adequate volatility. And if it does that, that's fine by me. So SPY, if I'm going to be bearish, we really need to break this trend line. The Qs, if I'm going to be bearish, we have to break this trend line. The IWM, same thing. This is looking better. We're still a long ways away, but we've come back a pretty decent amount, around 50% of the pullback on the IWM. The DIA, same thing. If we're going to be bearish, we have to break the trend line. I'm not bearish yet. I think this market probably has more things going for it to push it higher, push it to all-time highs, ignore a lot of stuff under the hood. It doesn't matter, right? As John Maynard Keynes says, the market can stay irrational longer than traders can remain solvent. I'm not the trader that's trying to call the top. I'm not the trader that's trying to be super bearish. There's no reason to if price is suggesting we're still going higher. Okay, now on the fundamental side, we do have some things I wanted to point out. All right, inflation data is sticky for the last 12 months. Our rate for the Fed is 5.25, 5.5, which is right around here. Okay, let me draw a straight line. So if we go 5.25, 5.5, we'll take this line right here. Okay, now the one thing that I believe this Fed regime does not want to see is the Fed get into a cut cycle and inflation trending lower for the last 1, 2, 3, 4, 5 year-over-year prints. Trending lower is good. But if we cannot break this 12-month bind that we're in, we are going to be cutting rates as inflation remains sticky. And if it's above 2%, we could say that remains elevated. That is a concern. And I really think that the Fed and the market prices a lot of things in. The market prices in things typically 6 to 8 months out. And if the market is pricing in a wave of rate cuts like it did last year in Q4, like it did most of this year to kind of see that the Fed was in fact going to cut rates, it was, 6 cuts, back to 3 cuts, back to 1 cut, back to 0 cuts, now to 3 cuts, emergency cuts. I mean, it's all sorts of stupid drama. But the point is, if the Fed is going to start a cut cycle and we remain sticky with inflation, stagflation is a potential thing. Now, it may not be something we have to deal with right now, but over the next probably 12 to 24 months, we're going to find out if the Fed is down 2% off these 5.5% interest rates and inflation is still hovering around high 2s or 3%, that's probably not a good sign. On top of that, we also have labor market. All right. So if we go to the inverted yield curve, we are still inverted. If I take a look at my 10-year and 2-year, so my 10-year, 2-year, so we're at 4.05 to 3.88. We're back up nearly around 20 basis points inverted still. We see that the bond market is up slightly, yields are down slightly. Mortgage-wise hasn't changed a lot. Here's the 30-year mortgage at 6.49. The 1 year, I think this is the 15-year at 5.66, and the 1-year variable at 6.06. Futures-wise, the dollar's down. I'll talk about that in just a little bit. But let's go back to the news. So we do have inflation data, like I said, sticky, trending lower, but with our rates, I don't think the Fed can get too aggressive with cutting. And I still think the data is going to be really important, that the Fed is going to be super, super vanilla with what they say. The market might price it in differently, but the Fed's going to keep saying the same thing. If data doesn't continue to support that we can have this soft landing, I do think this Fed will continue to talk very hawkish, if needed, to keep inflation at bay. If they don't, inflation could be a problem. Okay, let's talk wage growth. What trend do you see here? Wage growth in the US is trending lower. Is that a good sign? Not really. Unemployment rate is trending higher. Is that a good sign? Not really. Okay, job openings, unemployment claims, steady, right? Yes, we had a slightly lower print than what was forecasted. The market got really excited the last couple weeks on that. If we go to job openings, what's this trend? Lower. Okay, steady. How about non-farm payroll? Lower, right? Wages lower, unemployment rate higher, job openings lower, unemployment claims steady, non-farm payroll down. Look at this from February this year. So unless we start to see a better tick in employment or better data in employment, I really think the market now is more sensitive to employment data than it is inflation data. Now, we still have to watch inflation data. Every time we get this year-over-year print, which is going to be before the September 18th rate decision, we're going to see whether or not that year-over-year is lower than 2.9. If it stays sticky around 3%, okay, Fed might cut, they might do it reluctantly. 25 basis points is not a big deal, but I think the market looking out into 2025, it is a big deal. If the market's looking out that far and wants to see additional cuts, we need to see better data. That's just my opinion. So for the next 3 out of 4 months, September, November, December, we're likely going to see 2 to 3 cuts. It just depends on if it's all 25 basis points, and then going into 2025, is it 1 cut a quarter for another 1%? That'd put us around 1.7% lower than current rates. We have to see inflation. Okay. So charts are pretty clean right now. If we have a pullback or a pause, I could see a pause. I could see some gap fills. If the market just keeps flipping, ripping, good on it. Like I don't know what else to say other than impressive. I mean, it's a rip your face off drop, and it's a rip your face off rally, and yet the volatility index has had one of the largest declines we have ever seen. Let me just switch the chart up here. The VIX goes from this crazy spike right back to where we started in late July. So wild stuff indeed. I know I've been, just echoing that this whole week, but the market just doesn't care. So if we're going to, like I said, if you're going to be a bear, wait for confirmation. Don't try to be here and call the top. I am trading kind of neutral with some, probably week-to-week volatility. If we come up and hit the highs, awesome. If we come back and fill the gaps, awesome. All I need to see is, if I get the SPX trades running, I need to see about 50 to 75 points one way or the other, preferably 75 to 100 points. And the average trading range, by the way, is, let me go to average trading range on this chart here. Average trading range is about 148 points a week, okay, about 84 points a day. So I know that it's not every day is going to be directional, but the average move is about 150 points. Average day is about 85. If we have one good day, one good gap, one good push, one good 80 to 90 point day, that's enough to get my trade and profit and do my job. So that's what I'm looking at here. We do have a lot of positions running. Take a look at the old portfolio. I've got plenty of stuff in the hopper for the next couple of cycles. So getting through, August, I have some hedges. Getting through September, I have some hedges. I have some, futures market here with oil, with ES, with NQ, with copper, with gold, with silver, with Russell. A lot of stocks out here. Some ratio spreads, credit spreads, diagonal spreads, calendars, all sorts of stuff like that. So just continuing to grind as usual, trying to keep the charts really simple, really clean, and we'll look forward to doing it all again next week. So what an amazing run for a couple weeks. I do think it's interesting, though, that we paused right at the high from August 1st. Let's see what happens next week. Okay. So I think we're much closer to the highs, which gives this market a lot of momentum. We had a big shift in sentiment these last couple weeks, which we had a big shift in sentiment here. Sentiment was quite bullish, almost reaching yearly highs. And then all of a sudden we got quite bearish. And here we are getting back up into quite bullish. So a very emotional market the last probably 3-4 weeks. And I'm wondering if it's going to continue to be that way, or if things kind of stabilize and it's just more of the same, low volatility, grind higher, get to all-time highs, and the market can do no wrong, right? So stay tuned, stay invested. Happy trading, lots of profits, and have a great weekend. See you soon. Bye.